can see what the insiders are doing. Yes, sir.
So an insider is someone that works for that company.
Insider is someone that works for that company is in a position of power, essentially a key employee. So management, officers, directors, major shareholders.
They're allowed to buy just as long as they report it.
Within generally, yes.
So they can buy a bunch.
Oh, they can buy a bunch. They have windows that they can't buy the blackout periods around reporting dates where they can't. So on quarterly reports, they have to report the earnings every quarter. For a certain period of time before and after that earnings date, they can't buy or sell. But they've got open windows kind of between during the quarters to buy and sell. So you can find all that stuff online because they have to report it.
And you can't have certain family members buy for you type thing.
That's correct. No, because then now you're in violation of insider trading rules. And you've got a tippee. So the SEC governs all those things. The SEC also governs these guys, which is investment banking. So we'll talk about investment banking briefly. Investment bankers, if you recall from that funds flow, were the folks, the intermediaries that basically take the information and take the stock from on a primary offering and go, okay, we're going to position this and sell it to investors, to net savers. So they help, they help corporations design securities that are attractive to investors. In some cases, that's going to be preferred stock. In some cases, that's going to be bonds. In some cases, that's going to be common stock. In some cases, it's going to be a majority interest, a minority interest. They know the market. And more importantly, they know the institutional investors that are likely to buy that stuff. And so they're going to design a security that is going to be saleable. They generally buy those direct from the corporation. So there's a best efforts and there's a guaranteed. If it's best efforts, they go, well, we're going to see what we can do and you'll get the proceeds. If it's guaranteed, they buy them all. And that's why in that case that I mentioned, they go, we're going to guarantee you $12 a share, we're going to buy it all. And then they go public and they resell the securities to the investors. And if they underprice them, they're going to make money. And they're going to make money here too, because they're going to kind of commission off the $12. Here, they're going to make money if it goes up in value. So they're going to generally, if you're going to buy them from the corporation and resell them to the investor, are you going to buy low or buy high? Buy low and you're going to sell and you're going to make money on the spread. Investment bankers will get you coming and going, generally. Stage one, the decision stage. How much money do you need to raise? And we're going to look at how to come up with these figures in capital budgeting. How much money do you need to have raised? What types of securities? Stocks, bonds, preferred stock. Who's going to be your investment banker? When you guys, and there'll be one of you, at least in this class, that's going to have to deal with an investment banker at some point in your career. When you're dealing with investment bankers, interview at least 3. Don't take the slickest first one that will call you up on the phone and go, I'd love to sit down with you. Your company is brilliant. I want to do X, Y, or Z. Interview at least 3 and go through this process. Go to a competitive bid versus negotiated deal generally when you're going to be out in the market or when you're dealing with the investment banker. Everything's negotiable and cut the best deal you can. And so when you're looking at this first stage, you should internally have calculated what you think you need, what you think you're going to want to issue, debt or equity, and you work with the investment banker to tweak that. The selection of the investment banker and someone you trust is going to be critical. If you're in a stocks versus bonds, some investment bankers specialize in bonds, others specialize in stocks, some do the full deal. That's going to be your selection process and a competitive bid process. Any questions on this before we adjourn for the day? Thank you very much. I will see you on Wednesday.